Well, good evening. Good evening. Good evening. Hopefully, let's actually share the screen. That would be useful, wouldn't it? Okay. Uh, Window. Let's. That's better. There we go. Uh, Good evening and welcome to tonight's broadcast. We're a little bit early, so just getting switched on here at the moment, making sure it's all working. Looks like we are. You should be able to see a chart of Bitcoin here. So let's just see if we can get some comments going just to make sure that you can see at this stage. We can't officially start for another couple of minutes as yet, but let's see if you can see. Oh, it's a crypto saying. Oh, right. Okay, send it. Send what? Send it where? Send what? I don't know. Mr. Dilks, good evening. Hi, Timmy. Proto, nice to see you. And Scumdog, okay. And so, yeah, to the moon. Yes, I've come across that one. Yeah. Hi, Miles. And so we have got, yeah, just a minute to go. So, let's see where people are based in the world then. Where are you? I'm in about 50 miles west of London, and in West Berkshire, west of London. So where are you based? Let's have a see. There's a fair few of you I already know, and you're in the UK, but I suspect not everybody is. So let's just see where people are based here. So we get South Africa, Fando, Croatia, JB. Yes, you do. Yeah, it's purely that the challenge fund that I do is purely for our members. Yeah. Um, US Virgin Islands, Dan's down there in Crawley, Estonia. Right. Yeah. Nice. There's a nice Torquay. Yeah. There's a bit of a mixture here. So right. Sadesh, good evening, good afternoon, and hi, Nish as well. Anyway, people are coming in, so by all means, continue to say hello if you want to. But I thought someone said to me on the channel, um, I don't know, a few weeks ago, Charlie, you haven't done a YouTube broadcast for a while. And I said, oh, yeah, okay, well, we'll do one then. So this is very much a laid back affair. I'm just going to do some market analysis, give you some of my general thoughts on the markets. Because in my YouTube videos, I don't tend to do lots of market analysis videos because they're two to the dozen out there anyway. You can get that sort of stuff anywhere. I'm much more interested in um, trader psychology, and as you see in most of the videos, not all of them, but a lot of them are around trader mindset and that sort of stuff, and stories relating to traders. In fact, I might even share a story or two here this evening as well. So we will. So I'm just, I'm just looking at some of the comments here. So yeah, let's go and have a look because yeah, I've got a chart up here. So we're going to start off just have a look at the markets, and then we'll do Q&A and just chat. So first and foremost, you saw a guy mention me in London. You'll talk about how trading affects testosterone. Oh, right, yes, and vice versa. Right, yes. Um, oh, he saw me in London. I don't think it was a talk. That chap actually, Sadesh, was someone I was talking to privately with. I don't, unless I can't remember because I did do a mindset store presentation while I was down there. But I don't know if I was talking about that in that presentation. So I think it might have been that chap that I was chatting to. Yeah, he'd had some real problems with fear to such a. I said I'd share some stories, but this chap had such Oh, okay, yeah, and really nice guy. I know that I recognized him from his handle from social media because he's obviously must have commented against some of my stuff over the years. And so we had a nice chat. And what was interesting is he had like a major event that happened in his trading. And I think that his story was fascinating because he'd actually, I think it was something like he'd been profitable for 8 years as a trader, and then had this huge drawdown loss. I can't remember if it was a singular loss or it was over a short period, but basically he'd grown his account right up, and then mentally wasn't ready for the position sizes that he was now trading at. And anyway, yeah, good evening. And so it didn't work anyway, or he wasn't ready for it, and he made some big losses. But that was 2 years ago. And I think the main part of this story is that it just goes to show you, I always say, don't underestimate the power of the dark side. And just how something like that, an event like that in his trading, is still affecting him to this day, 2 years on. And so we were having a chat, and I said, you really need to have a read of The Hour Between Dog and Wolf. Because in that book, they look at traders' biochemistry, not just your conscious mind and subconscious mind and your the mindset related stuff. What they were looking at is how our biochemistry can affect our decision making and our conscious subconscious. So, and what they did a lot of studies on some bank traders, and some bank traders, when they lost a lot in like a bear market or whatever, and this was all these studies were done like 20 years or so ago, um, their testosterone levels would go down, because that's natural in your fight or flight responses. If you're trying to run away from a situation, your body will naturally m- rapidly lower your testosterone, which allows you to run away from the situation. But the problem can be is that our testosterone levels can remain deflated for, and this is what they found in these studies, literally years. And so therefore it can affect you going forwards. And we were having this conversation. He was like, "Oh my word, Charlie, this could explain a lot." So I said, "Well, have a read of the book in the first instance. There are ways to help elevate your testosterone. Obviously, you can go through TRT, which is testosterone replacement therapy, but there are potential side effects from that. So not everyone's going to want to do that sort of thing. Um, but you can take holistic, herbal type testosterone tablets or whatever. But also from a dietary perspective, increase your protein in your diet, and also resistance training, weight training is really good for elevating your testosterone levels as well. So there are ways to do that which may help. And so yeah, that was a fascinating story of his, that he's still going through this journey right now on that. But yeah, there you go. Oh, Timmy. Yeah, no, yeah, you're absolutely right. Timmy's saying, yeah, but bank traders are not losing their own money. No, they're not. And you're absolutely right. But what they found in some of these studies, they were obviously still massively affected by it. So at the end of the day, if they can't hit the trigger, they don't get their commissions, do they? So it still affects them. So, but yeah, I know what you mean. It's different. But nevertheless, in those studies, they were still massively affected as well. So again, don't underestimate the power of that dark side there. And if you do feel like you're going through a fearful stage, then that may explain some of that. So if you haven't read the book The Hour Between the Dog and the Wolf, it's worthwhile reading that. And so and there's lots of people who have lowered testosterone levels, so that can act as a hindrance if you are gripped by fear, of course. Now, just because you might be gripped by fear as a trader, it's not a definite that you've got lower testosterone levels. It's just something that could be the case. His was more of an extreme case, of course. And so for most people, it's quite natural to suffer with fear in trading. And it's something that normal trader mindset, psychology work will overcome that. So, but there are these extreme cases as well where we see um, people's testosterone levels can remain low for years. So, okay, so let's go and have a look at the markets here. So there's plenty of us in here this evening. So thanks ever so much for coming in live. And so let's have a quick look. I think the first thing that I noticed here this afternoon, which is a potential, and this is why I've got Bitcoin up, um, is that we've potentially got an outside reversal day coming, or a key reversal day. And I have to say potentially because, of course, Bitcoin it's nowhere near closing um, as yet. So we've still got several hours to go till the close. But um, for those that are not aware, an outside reversal or a key reversal bar is when price makes a new high, which it's just made a new high above yesterday's high, and then closes below the low of the previous day. So we don't know that that's definitely going to happen. But if it was to close like this, then that would give us a key reversal. Now, what does that mean? Well, a key reversal bar is just another, it's in candlestick analysis. It's a sign of a potential reversal. It's not a guarantee, like nothing is a guarantee in the markets, but certainly it can be an exhaustion sign right at a high, especially at all-time highs. Now, when we say an exhaustion, that doesn't mean to say that's it, that's the major top, that's it, it's going to go all the way down. It might just act as a temporary high if it does do that. So, and even then, it's not a guarantee. We see key reversals in the stock markets, in like the S&P and stock indexes, um, that amount to nothing. So you don't bet the farm on anything in the markets, but it may well be interesting considering actually we're just starting to see a little bit of euphoria stage coming in relation to Bitcoin. Some of my traders have been saying, one of my traders said he was at his son's five-a-side soccer match last night, and one of the parents was boasting that he's just bought Bitcoin and it's going to the moon. Fun enough, someone said that. This guy said it's going to the moon. And you think, yeah, when you just go to your kids' football game and you've got parents talking about buying Bitcoin, that's a bit of a warning sign, you know. So in the near term, and that's just obviously an individual case. But as more people start to hear about the likes of what Bitcoin's done, it's on the news, it's on TV programs, then the masses start to think, oh, I need to buy some of that stuff. And as the masses come in, it's usually at the wrong time because they're coming in after a move has already happened, long after it's already happened. By the time it hits the news, the market's already run, hasn't it? So it may be that we're close as well from a sentiment perspective to a near term high, and it's due a bit of a pullback. But we know we've got the halving coming up in just next month, so we'll see when that actually happens. But I do think it's worthwhile keeping an eye on that key reversal there on the if it materializes. Bitcoin's like I'll turn it on in the morning and the key reversals disappeared, sort of thing. It never happened. But I think for some of you, I think it's worthwhile bearing that in mind. Personally, I'm a bull towards Bitcoin. I think that the price action since October and especially post the ETF launch in January, I think has been very positive towards it, and I think that the scope is there to go to six figures this year. Yeah, but um, these markets don't, as we all know, don't go in a straight line a lot of the time, and so I would expect pullbacks anyway. And so a very swift correction could come at any time in this market, but and I think we need to have corrections because you need to constantly have a market that's shaking off some of the weaker hands. So you need to have that sort of thing anyway. But to me, Bitcoin is, until proven otherwise, is in bullish modality. So traders are going to be looking to buy the dips. So it's as simple as that. But in the yes, Timmy, yes. So I hear. And I think that's a valid point talking about consolidations, because a lot of the time we talk about markets, when they're going to correct, when they're going to do pullbacks, but corrections sometimes come in terms of time as well. So we don't always get, a larger pullback. Sometimes markets, and Bitcoin's a classic of this over this last year or so, whereby it sometimes, quite often, will just go into a sideways correction as well. So, and that will, and if it does that for a couple of months, that'll put some traders off as well. So, anyway, watch out for that key reversal. We'll see if that materializes there tonight on that one. So I will come through your questions. I can see some questions coming through. Um, I've got a question saying, when day trading US indices, so like the S&P, what is a reasonable stop loss on a lot of 5 contracts? I hear common is 3 points. What's your opinion? It probably is quite common around about 3 points, DK. But when you're when I was day trading, I don't day trade anymore. But when I was day trading, I would never trade as arbitrarily as just using a 3 point stop loss, because it's meaningless. So I would look at the price action and place my stop above or below certain levels in the market. So rather than being constrained to a random 3 points. So for me, it's more about looking at the levels of support and resistance in the market, and then placing, your orders, your stop losses around or outside of those, rather than an arbitrary 3 points. Sadesh, yeah, that's what happens in the markets. And so going back to Bitcoin there, Sadesh was saying that he was overly bearish on Bitcoin last year, and so then therefore was missed out. Yeah, I think there'll be a lot of people who will be feeling like they've missed out in Bitcoin. I think if you're buying it unleveraged, then, and you think it's going to go to 100,000, I think it's natural to think, oh well, I'll buy it if it pulls back, and it may well pull back, and that would make for maybe quite a nice buy point. But if you're trying to buy it because you think it's going to go to 100,000, well, 100,000, even from where it is now, it's still nearly 50% gain from where it is right now. But people get fixated with, oh yeah, but what if it pulls back? Well, if you're just buying some, you're not trading it, then there's still ample upside, providing you're managing your asset allocation and you're not putting all your eggs in one basket and all of that. Then you're investing what you can afford to take, potentially large drawdowns on, because that can happen as well, of course, as we know. So, but the upside scope, if you are bullish, as you say, bullish on it, for whatever your levels are, then there's still, I guess, some pretty reasonable upside there. Okay, so let's come over. What do you think? Oh, American Wong. I didn't know nothing. MTSR, MSTR. I don't think. Oh yeah, I have got it here. Yeah, there we go. MicroStrategy. Yeah, it probably is another GameStop to an extent. I think it. Yeah, that's going to end in tears. It always does, without fail. American Wong. Um, it always does because people get excited. They see this tremendous run that it's just had over this past month. It's just what tripled. Um, but these things do always end up in tears. Where they top, who knows? But whether they top now or it goes to 3,000 from here, who knows? But usually, when something gets really hyped, then it's just a matter of time before something nasty happens. So I don't like that type of thing because, as you saw with GameStop, well, you saw what happened. So. There's so many questions coming through, and I've not even had chance to do any of my analysis that I was going to be doing. So, yeah. But what do I think about the euro dollar today? Nature. Yeah, the moves that we had in the currencies against the dollar this afternoon. So the euro's pulled back here, but so has the Aussie dollar as well, and cable here as well. So all of the currencies have pulled back here against the dollar today. Um, they didn't have anything to do with the news that came out today. The retail sales out of the US came out worse than forecast, but then the producer price inflation came out slightly higher, and the weekly unemployment claims were fewer, so that was a positive as well. But I was sitting here with my traders, and we were watching at the time. There was no major volatility around that. That's not what's produced these sell-offs, particularly this afternoon. I think that the market is looking towards FOMC next week. I think this was the last main news event, being retail sales, because retail sales, the Fed are watching these retail sales numbers, one of their key measures, because it is a sign of how the consumer's getting on. And remember, last month the retail sales were really poor. Um, so I don't think these market moves are to do anything to do with that. I think it was almost like, right, we've got that news out of the way now. Let's now go and speculate on FOMC. And when I say speculate, what I mean is I think that there's some market started to reprice what the Fed are going to be doing. All eyes are going towards next Wednesday, so there's a bit of a repricing going on with regards to whether the Fed are only going to do 2 rate cuts this year as opposed to 3. And I think that was the real story, not today's news. So the markets started to front run the FOMC. Now, what it's not that this couldn't develop into something much more substantial and the euro and these other currencies completely roll over, but I think you have to be a little bit wary of these moves this side of FOMC now. There's going to be moves every day, of course, heading into that next week, but we won't really know until after that. So I'm sort of reading this I'm taking this with a pinch of salt. This price action here today, it's a good down day, yeah, and it's pretty weak, the euro, and combined that with a couple of ECB members have sort of said today that they think that the ECB can move towards four rate cuts. So there's been some dovish talk from some ECB members as well, both today and yesterday. So that probably not helped. But in the grand scheme of things, I'm seeing this as, for now, I'm having to assume this is just next Wednesday. Retailer shorts that go long. Yeah. Well, yeah. retail are always doing the opposite of what the market's doing. Yes, and so the market won't just move just in a direction, obviously, because of what retail are doing. Retail are just reacting to the market. But yes, it's always fun to see what retail are doing. You're right. They have this amazing knack of wanting to, when a market goes up, of selling it, and when a market's going down, of buying it. It's just what they do. Because, and the reason they do it is twofold. Mostly it's psychological, and so you got to bear in mind the masses out there trade a lot of the time on emotions. So they might use some technical charts or whatever, but they still get emotional and they think, oh, this is going up, I'll sell it. It can't surely go. My my stochastic indicator is above 80. It's overbought. It can't go any higher. And then they sell it and they don't use stop losses, and they just, it just carries on going against them. And anyway, so it's just what they do. And so it's a funny old thing, but it never ceases to uh, interest me what retail traders do. Anyway, uh, 4-hour trend channel on the euro dollar price currently sitting on the lower. Yeah, yeah. If I go to the 4-hour chart here and I put just zoom out there, what Michael's referring to is maybe something like that. Yeah, about that'll do. So a bit of a channel here rising up for the eurodollar. It's come down to the lower channel. With channels, a lot of the time price will disrupt channels. It won't always, just because it breaks it, doesn't always mean that if it breaks here, that it has to then go the projected, distance or width of the channel. Quite a lot of the time, when price breaks a trend line, I use the words that it will disrupt it. So it'll disrupt it. So then we have no use for that channel anymore, and we just get rid of the channel. And all that happens is it just goes sideways, and then still ends up potentially still going higher as well. So we do see that sort of thing going on. But yes, at the moment, absolutely, it's a nice channel. If I put that back to the daily chart, yeah, it's quite nice that off the lows there. I'll take it off for now because it's going to be a bit too busy on that chart there. Now, I think what's interesting as well, though, is with what's going on here on the currencies against the dollar is the stock markets. So the S&P, again, if the stock markets start to roll over, then it's not 100%, but it's more likely that the currencies against the dollar start to soften and the dollar strengthens. Normally, if the stock markets start to come down, then normally we see a stronger dollar. So I think it's interesting at the moment because the stock markets have had such an incredible run. And again, I talked about that key reversal on Bitcoin earlier on. Well, on the cash market of the S&P just last Friday, what happened? Some of you already spotted it, but yeah, we did a key reversal day. We made a new high at that point and then closed below the low of the previous day. And we're still trading within that at the moment. So, and it was the same on the NASDAQ as well. If I show you the NDX, so the cash market of the NASDAQ, you can see that big red bar there, which made a new high and then closed below the low of the previous day there. So the NASDAQ has got a key reversal there. Like I said, though, you do get key reversals. They don't always amount to anything. Look at this one here. We had a key reversal here. Price just went higher to new highs, negated that whole bar, and then that was that. Yes, it ended up coming over a little bit more, but then ultimately going higher. So you do get key reversals that just don't amount to anything. But don't get me wrong. Yeah, so you do get that, but they're still interesting candles nevertheless because of their very nature. Morning from Australia. Wow. Good morning to you, Barty. Yeah, we are retail. Yes, you're right. We are. I'm retail as well. I may be a money manager, but I'm still retail. I still trade my own accounts. But there's different levels of retail, of course. What we're talking about when we're talking about retail is the masses of retail, just how bad they are at trading, because they trade on emotions, and so there's many retail traders are highly technical traders. That's not what we're talking about when we're talking about what traders do. And in fact, coming back to that point that was raised earlier on, that a lot of the time if a market's going up, then for in the trading community, lots of retail will be trying to short. Now, there's nothing wrong with shorting a market that's going up if you've got a strategy and a method that you're following with what? A stop loss. But the problem is that so many of those retail out there, the masses of retail, don't use stops. So because they don't, they want to avoid getting stopped. They don't want to be crystallizing a loss, so they then hold on and then add as well. So they do all that sort of stuff. So that's where the problem is. If you've got a method where you've got given patterns that you're trading, which may be counter trend, there's nothing wrong with that. But yeah, what we're talking about, and we see it in the numbers, that retail get net short in something, and then they go underwater and deeper underwater and deeper and underwater. You're like, wow, that's just what they do. And on average, within all of that, there's plenty of us technical traders who are in and out. Maybe we get stopped out, whatever. It doesn't matter. But yeah, it's that en masse we see those numbers of retail going underwater and just not bailing out. And in fact, more and more retail start piling in as the market goes up. And so yeah, it's crazy, really. Timmy, yes, there are some divergences on the S&P. Yes, actually, there. I've got an MACD indicator down here. It's just about there. Let's have a quick look. Yep, on the S&P, but it's actually a lot clearer if I show you the Dow here. So the Dow, as the Dow, uh, made its first high here, where it peaked on the MACD indicator, then it made a subsequent high here. So in the point 0.2 over here. Then it made another high here at 0.3, and then we've made a I don't know. I'll have to double check if we made another high here at 0.4. But what we're seeing, and there's one there. So what we're seeing is a general lowering of that indicator as price has gone higher. Now that can continue going, and so divergences can carry on moving as prices go on higher. But yes, you're right. There are divergences there in play. And I'm just going to double check here on this contract. 39,283, 39,278. Yeah, so it did make a new high here just today as well. So we're certainly seeing, as we're coming into the final hour of trading here in the US, we're seeing the Dow back pretty much at its lows of the day. The S&P's pretty much at its lows of the day. They're hardly dramatic days though. All right, we've still got an hour of trading, and they may pick up yet. If I go down to an hourly chart, we may see selling intensify. We often see that sort of thing, or moves in the final hour of trading. But so we'll see. But it's not a big dramatic day's range at the moment. But anyway, we'll see how they get on over the next hour or so, really. Hello from the Commonwealth of Dominica. Well, good evening to you. Charlie, looks like more people are interested in the Q&A than markups. That's a first. Than the markups, Sadesh. Yeah, probably. Barty, you have a question. Do you think we work on 6 cents sometimes? In the last 2 days, I have little bounce back and I followed all of my rules. If I had listened to your 6 senses, I could have ended up with 8R. No, it's the worst thing you can do. Sorry, no. You're using one example and and then saying in the last 2 days, of what's happened, and you're using that as a singular example to say, oh yeah, my gut instinct, my sixth sense was telling me I should have done this, but I didn't. I stayed with my plans, and look how much money I would have made if I'd have done that. Um, that's the lure of the market, luring you in to make mistakes. Because yes, you'll see things that happen in the markets and say, oh, if only I'd have done this or that. And then what happens is you go and start trading on gut feel and sixth sense, as you say. And when you actually start doing it, you'll end up going all over the place because you have no plan, and you'll end up blowing up your account eventually from doing that sort of thing. So no, please don't do that. Your sixth sense, your gut instinct there'll always be times when it's right, but more often than not, when you're actually trading with real money, trying to do that, you'll end up just messing up completely. Yeah. No, please don't do that. That's the market trying to get you. I always say the market is trying to lure you in. The market is like the devil. He's trying to get you to make mistakes. He's constantly whispering in your ear, telling you, do this, do that. And that's what he's trying to do. That's what the market is trying to do. And you need to try and resist all of that. So have your plan, whatever your plan is, and stay with your plan. If you then start deviating and jumping out and making all these different decisions, oh, I know I'm supposed to hold on to this profit for this amount, but my gut instinct tells me that it's going to roll over right now. And then what happens is sometimes it does roll over. So then you reward yourself. See, I was right. It rolled over and I still banked a profit. Yes. And what's happened is you've now just taught yourself a bad habit. The market's just won at that point, because going forward, you're going to, every time you next get into a trade and your stomach says, oh, let's bank this, I think it's going to roll over, that time it doesn't. And then you're banking your profits too soon. You're not, then you're not going to be paying for the losers when the losers come along, because you're banking your profits too early. The market has won. So don't fall for it. It's the market trying to get you. Techniques to train your mind to lose on a daily basis. I don't quite understand the question there. Maybe you mean train your mind not to lose. You want to train your mind to lose on a daily basis? I don't know. You need to. Can you, Abdul? Can you maybe re-explain what your question was there? Yeah. So just whilst we're and if I've missed anyone else's questions, then by all means type them in again, because I'm just scrolling back up now and I've missed some questions here. Dan is saying, it's so refreshing to hearing someone talk about the fundamental underpinnings and economics of these markets as opposed to everyday technical 15-minute time frame jargon. Yes. That's not what we do. Why do you no longer day trade? Do your students still day trade? DK, yes, we still do a weekly day trading session, but I'm just very open with my members that I don't have the time for it. I genuinely don't have the time for it. I'm running sessions in my trading community every day of the week, and then in between sessions, I manage 7 different trading accounts. How the heck could I day trade managing 7 different trading accounts, which all have slightly different risk profiles to them, No, no, no. Way too much. Plus all the meetings and Zoom calls that I have to be on in between. I wouldn't be able to day trade. But the reason that now I wouldn't be able to anyway, not in a committed way, but because I still have all this stuff to do, this other work to do. Um, so swing trading suits me more. But I come across this all of the time. So yes, we do have members who do day trade. Absolutely. Because I'm not saying to people don't day trade. They can use my techniques and whatever techniques they use as well on an intraday basis. But I don't have the time for it. In a few years ago, I just once we got the dog, that was 7 years ago, I realized I haven't got the time for this day trading. That was 7 years ago, 2017. So I started day trading less and less, and so just because I didn't have the time, and as I got older, I don't want to be having to jump out of the shower in the morning because the markets have all jumped and I need to get into a position or whatever. I don't want to be doing all that. So no. And also, there's this whole myth in the markets that people assume that if you're full-time trading, then you must be day trading, and you really don't have to. You really don't have to. You can still just trade, be a full-time trader, but you don't have to be there clicking away all day long. And so you can make just as much money swing trading as day trading. But the problem is that people associate more trades with more money. And it's not necessarily that straightforward. So, like I said, you can swing trade and make just as much money as day trading, where swing trading by default you won't be taking as many trades, but you can be just as profitable. So it's this myth, people assume they must day trade, and more people lose money day trading than they do swing trading. And so I tend to advise people, especially people who have been trading less than a year or two, don't day trade. You don't have the emotional um, resilience to the markets when you're new to trading. By all means, once you've become experienced and your mindset is strong to trading, then yeah, if you want to day trade, fine. But especially newer traders, I try to advise them not to day trade, because the emotions of trading intraday for a newer trader, it's too emotional for them. They can't control their emotions. So they're better off not doing that. There you go. Okay. Opinion on gold, JP. Yes, gold. Well, gold's had that major break. On the monthly chart, gold's got this lovely, great big technical analysis cup and handle pattern on the monthly chart, which is just breaking out of at the moment, or has so far. Whether it becomes a false break or what, it doesn't matter. It's a bullish pattern. So we've got a bullish pattern on the monthly chart, and actually, if I go to the weekly time frame, there's you'll hopefully see this inverted head and shoulders pattern as well. So overall, you've got an overlap of bullish patterns there on the higher time frames. So um, so coming back to gold on the likes of the daily chart, yeah, I'm bullish on it overall. So that now me being bullish on it, and I always have to be careful here because I'm talking to people that I don't know. Um, that doesn't mean to say that gold couldn't do more of a pullback here, but I'm bullish on it unless it really gets back below, 2020, 2020, 2020, this zone down here. So if it gets down below there, then I may change my stance to neutral. But overall, we've got these major patterns on the bigger picture, monthly charts, weekly charts. So I'm bullish. Yeah, bullish silver as well. I think silver's a lovely chart. I'll zoom out for you on silver. So this is a quarter. Actually, I'll take it to a monthly chart and zoom it. There we go. So this chart of silver, there's the all-time highs here that it made in 2011. and I'll tell you a story about that in a minute. And anyway, so we've got this trend line in. It's a lovely trend line. It's clustered around this trend line, so it's hugged it for the best part of the last year, and it's trying to break out. We've also got this horizontal level just around $26 all the way, going all the way back through those lows back there in 2011, 12 as well. So that $26 area is lovely as well. And it keeps on bobbing against it. So when price keeps coming back to a level, ultimately I'm always looking for it to break out. So that's how I'm looking at silver. But that's on the monthly chart. But again, so I'm bullish towards silver overall as well. And again, what it does in the very near term here, pulls back a bit. It's had a good run over this last couple of weeks. Yeah, that's all fine. But I'm overall bullish towards silver until proven otherwise. Unless it, majorly rolls over, then I'll maintain a bullish stance towards that. Um, can you explain how you are using the MACD with your strategy? No, I can't, Jordan, because the specifics of my trading strategies are for my members. I can't just talk about that sort of stuff openly here because that wouldn't be fair on my members. So, but overall, I can talk at a high level, Jordan. When I'm using MACD, there are a couple of different ways that you can use it. I do use it for divergences. I have specific rules with that, which I'm not going to go into, but I do use it for divergences. I do use it for confirming medium-term momentum as well. So I will use it for that as well. So and there are certain little specific little patterns that happen from a momentum perspective as well. So there's a few ways that I use it basically. Yeah. Oops. Let's just go back. Uh, Here. I am interested in these stock markets tonight. In that, I think these are interesting because, um, I mean, this is just on the. This is just Awanda's pricing here of a CFD contract, but that would be a key reversal on their CFD contract. But I've already checked the S&P futures out today, and um, there wouldn't be a key reversal on the S&P futures because they never made a new high for the move. We didn't go today as high as we did last Friday, so there's not really there isn't a key reversal on the futures. It's just on a CFD contract, but we know there is, of course, already in the background there on the daily chart. But this is interesting because we're in this final hour of the cash market, and the S&P is at its lows of the day. So um, looking like we may still push further down yet at this stage, considering where we're at in the final hour trading in the US is always interesting, because so often you get reversals or pushes to new lows or pushes to new highs in the final hour. So it's always interesting to see how a market's getting on. So bit bearish coming into the end of the day there. And again, like I said earlier on, um, that is spilling over into the currencies as well against the dollar. The dollar's benefiting on this as well today. Sadesh is asking. He said he has live markets sample size of 200 trades. His results are a 33% win rate, giving a 2.7 risk to reward ratio. That's great. That looks good. What would you recommend you to improve on? I don't know because I know nothing about your strategy, what you're doing, or anything. All I can say is that looks pretty good. So I know nothing about what it is. So, but I there's always you know you can go back and mine through it all and see whether you can get better. Obviously a higher a higher risk to reward. I don't know, but yeah, it just comes that back down to data mining, going back through it all and testing different stops and targets really on that. Dollar CAD ARC. I mean, a lot of these currencies are having some pretty bad days against the dollar today. The issue I have currently with the dollar CAD is, and it has been like this for some time, is this monthly chart. I can't. There's not much of a read you can get when you look at that monthly chart. So it's just overall just chopping around within this monthly chart. So for me, there's not a lot of interest for me personally in dollar CAD. So when you're asking me about it, I'm just going to be honest with you and say, yeah, I don't really care about dollar CAD. I don't have any interest in it at the moment. So yeah, sorry, I'm not going to help you there. Sorry, Ark. um, Silver has pretty much behaved as you said it would months ago when speaking to Alessio. Yeah, I mean, I've been bullish towards silver and gold for quite some time because of those big picture patterns. So I won't be really changing that analysis for quite some time. Even if they pull back, it won't really change my overall analysis. Oh, I was going to tell you a story, wasn't I? So years ago, back here, this is a monthly chart of gold. Yeah. So, and this is a great example of market sentiment for you. So, it was in October of 2011. I was doing a webinar actually with Alessio, fun enough, for Alessio for his followers. And so it was in around the October or November of 2011. And look at the years of price action going into there. Forget Bitcoin at that time. Bitcoin didn't exist. I know it did from 2009. No one knew about Bitcoin in 2011. So forget that. The people who trade and buy Bitcoin these days, if they were in the markets back then, they would have been buying gold and fascinated by gold. So um, we had this situation whereby we had gold kiosks in shopping centers, exchanging cash for gold. Everybody in retail wanted to be in gold, and everyone thought it was going to go to $5,000, yeah, or more. There was all these crazy predictions on where gold was going to go, and so um, in this webinar, I was talking about the fact that I thought that gold had topped out. Fun enough, because it had actually done a key reversal month. And I said, look, the sentiment is so overly euphoric towards gold, and I don't think gold's going to be doing anything here. And I got all this abuse on this webinar from some of these people because I was telling I was going against what they thought was going to happen. And I said, well, look, this is even more evidence to me that I'm getting abused here just by sharing this information, and how much you're getting so defensive against this. I said, this is even more of a reason why I think that gold is probably going to has probably topped out for the time, for a meaningful period of time. I'll never forget that webinar. It has always amused me because it was a great measure of sentiment, that at that point when you get that kind of euphoria, and we've seen it in Bitcoin as well, when everyone says, no, Bitcoin's not going down, at some point they will retrace, they will come down, like all markets do. And so when everything gets a little bit too euphoric, then that's what happens. Interesting story there. Barty's asking, let me just go back, because didn't you ask another question? Oh, about you were talking about gut instinct. Basically, he's asking if you share openly on social media your strategy, your method might stop working. It's possible. I've seen methods that have been widely available on on the internet, social media over the years um, that have stopped working. Yeah, because the masses all got hold of it. But it depends on whether the masses all adapt and adopt your method or not. Most methods, the masses don't. The masses tend to adopt methods that are really simple. So yeah, but most methods are pretty safe because most people won't stick at them anyway. So I wouldn't worry about that. Any thoughts on Tesla and Apple? Yeah, let's go to Tesla here first of all. Then, where are you? There you go. Um, yeah, it's really rolled over. I was with Alessio just a couple of weeks ago, and he said, "Oh, he thought this rally was corrective," and he was completely right on that. It's really rolled over. Um, but you're talking about general thoughts. I don't track what Tesla's doing as a business, as a company, so I can't really offer too much other than what we know. I mean, Tesla's still a good company, but it's got a lot more competition now. Um, what I have got on my chart of Tesla is this, what I think is a lovely trend line because we've had multiple tests once it was created. Then we've got these multiple tests of this trend line. So the only thing I can say is that if Tesla at some point comes back up to this trend line, there could be a lovely trend line break. But that's not what it's doing at the moment. It's in a downwards trend. I don't know is the answer because I don't track the business of Tesla. So I think when you're looking at individual stocks, I think it's important to understand the business itself as well. So I can't say much more other than from a technical perspective. Yes, if at some point later this year or whenever, if Tesla comes back up for this trend line, then watch out for a potential breakout. Other than that, nothing. Okay. Um, I don't trade JB Bitcoin. I don't trade it. So I just occasionally buy it as a bit of a, you know, medium term play, unleveraged. So I don't trade it. So I don't use strategies for it at all. No, no. I will literally just I started having a nibble in October when it started breaking out in anticipation of the ETF. And then I just set up a recurring payment. I'm not technically buying it at all. So no, I don't trade it. I don't technically buy it, but I will get out as well. But it's again, I have to really stress it's money. My attitude is well, it's money I can afford to lose. I don't trade it like I trade the markets, like I trade currencies and whatnot. I'm not trading. It's not like that. It's relatively small positions, I say, or buys that I have, and which I'm happy with to have some exposure to it, just as another asset class, and that's why I see it. And I'll be out at some point myself. If Bitcoin goes up further, then yes, I'll get out. Once I think of yeah, once I see that another major euphoria stage, that's what I'll be looking for. Not that there's not been a little bit of euphoria right now, but going back to Bitcoin coming into this past few weeks. So I think this key reversal bar, as we keep talking about it, is quite interesting. I'm not bothered about it coming down. So that's what I mean. I'm just holding Bitcoin. I don't care about if it corrects X amount. It doesn't bother. I'm not trying to trade it in and out. So just got it as a holding, bit like other asset classes that people might hold. Um, That's right, Timmy. Yes, confirmation bias. People don't want to hear what goes against their assessment. No, you're right. You're right. And that's really dangerous in the markets. None of us like that. We all look for um, other market analysts or whatever who have the same view that we have. Um, so that's natural, but it's important for us to try and at least see the other side of our view, you know, and to rationally see it. They weren't rational, you see, they were emotional, and that's a sure sign of a euphoria stage. Swing these days, Arc. I was talking about this earlier on. Yeah. Um, I've won day trading events, live events and stuff over the years, but I don't day trade now. And I don't recommend anyone who's only been trading a year or two, I don't recommend them to day trade. If you're experienced, fine. But for most people who've been trading less, I don't recommend it because you won't have the hardened resolve, you know, the thick skin that you need, the strong trader mindset in order to deal with the intraday moves that are going on all of the time. If you've only been trading, you know, a few months or, you know, a year even, or 18 months. So I prefer it that people who have been trading less don't do it, because then it takes a long time to emotionally mature as a trader, and you're not going to emotionally mature in a year. You just aren't. It just doesn't work that way that quickly. So I would rather. And the thing is with intraday, therefore, there's lots of temptation all of the time. Markets are whizzing around up and down all the time. That's not good if you are still a young, I say young, but a new trader, because you're not going to be able to deal with all of that temptation. Hence why I prefer newer traders to be trading off of slightly higher time frames. They can still trade off of hourly charts, 4 hourly charts. It doesn't all have to be off of daily time frames, but just get away from the 5 minute and the 2 minute charts. Get away from that. Hi, Jack. Your method is to wait for the markets to bottom out and then you go long. Well, that's a great method, provided that you know where they are going to bottom. Send me a note next time. But yeah, there's nothing wrong with whatever someone's method is. If you've got a method and approach, great. Even if you share a strategy, most cannot stick with it anyway. Yes, exactly. That's right. Michael, can you have a look at cable? Yes. Um, are you expecting a decent run up soon, as broken the monthly trend line? Right. So, yes, on cable, I've got a trend line. I know I've got a lot of lines on my chart here, but going all the way back to the highs of 2007 here, where it crosses this highs of June of 21. Then we came back to it again in July of last year, and then we've coming up to it, and we're trying to break out of it as we speak, or we have really. We've on the daily chart, we've broken up for it, and we've just come back down through it as well. Um, so. Uh, Yes, I would like to see cable break out, Michael, going all the way back. Oh, sorry, if I take that back to a monthly chart there. We've got so many trend lines on here. You know, I have to go out to a quarterly chart to see all these different trend lines. But yeah, I am looking. I would like to see cable break out to the upside. Yeah, it's pulled back today, and probably is going to continue to be under pressure between now and the Fed, and then we'll just see how they react after FOMC next week. I think, provided that cable doesn't materially break down back below sort of 126, then yeah, well, we might well get a bit of noise here in the coming days. But let's see if it can then start to after the FOMC, if we start to see it coming up. So overall, yes, I'm bullish towards cable, unless if it goes back below 126, uh, then I'll switch to neutral on that. Proto, how and where to join to be one of your members? Just go to charlieburtontrading.com. You can just subscribe by yourself. It's just a membership, so you can go and have a look on charlieburtontrading.com, and it's all done through there. um, don't know what Pikachu is saying. All that indicator just to trade demo. I don't know what that means, Pikachu. So you're gonna have to explain yourself there. Uh, what are your thoughts on the short-term future of oil? Had a nice pop today. Yes, it did, as a result of those Ukrainian attacks on Russian oil refineries. Um, yeah, you're up on that, Dan. Yeah, if I go to oil here, yeah, it has been a nice pop. It's been a really messy chart, oil, for some time, for the last sort of month. Lots of like up days, down days, up days, down days, lots of chop, and then today's finally having a bit more upside. So it has got an upside bias towards it at the moment. But overall, if I come to the monthly chart here for oil, I don't have too much to go on. I could put a trend line on this weekly, so let's do that. So there is this trend line on the weekly, which I'm sure you've probably got on. So there's definitely a bit more upside towards that. But if it gets up to what's that, around about 83, $84, then it's going to have that to contend with. So in the near term, yeah, probably some more upside towards that. But then we'll have to see how it reacts to that trend line. I'm fairly neutral towards it overall, Dan. Girish, can you have a look at FICO stock? Uh, okay. The reason because I don't know anything about FICO, so um, so that's why I've just sort of said, oh, because I know nothing about the business. Yeah, it's a nice down day, a couple of down days here, but I know nothing about the business. I can look at it from a technical perspective and say, yeah, okay, yeah, it's coming off a little bit here. Looking at the weekly charts, I'm just going out to the monthlies here as well. It could end up, keep an eye on it in case it does like a monthly key reversal. We're getting some key reversals potentially coming in at the moment, but that's not going to be until the end of the month. So what an amazing run it's had, but I know nothing about the business, hence why I don't like to comment on stocks that I don't know nothing about. So yeah, sorry, I'm not going to be able to help you there. I'd rather say that and be honest rather than trying to give you some technical analysis on it. I don't think that's worth it. Barty, thank you for that. If you're still there, it's very kind comment there. Um, Proto, yeah. I mean, I don't really trade the Mexican peso, so there's no point me looking at that one as well. 3 years trading and still more stop losses, Mariam. Yeah, most people, I'll be honest, Mariam, most people don't become profitable as traders until they're about 4 to 5 years in. So just keep going, just keep at it, because it's you're not, what I'm trying to say is it's not unusual um, that you could be 3 years in and still, not profitable, as you're sort of saying there. So I just want to give you some positivity there, that you're not there's nothing wrong with necessarily with where you're at. You're learning. That's the main thing. You're learning from your experience, you're building your experience, and then at some point it will start to happen. But it's a lot of people, like I said, 4 to 5 years in before they turn a profit. Um, Yeah, there you go. Sadesh has just said that. There you go. So hopefully, Mariam, that's helping you as well from what Sadesh has just said there as well. What's my thoughts on all these smart money traders? Is this ICT stuff? Is that what that is, JB? Is it all the same thing? Is that what that is? SMC, ICT, TTT, CCC? I don't know. Um, it is right. Okay. It's just a method. It's just a method. It's sort of based around some of the principles of Wyckoff, but it's just a method. There's no, there's nothing in it. It's just very well marketed. Very well marketed. It's just a method. Most of the practitioners will lose with it, like with any other method, because it's not about the method. It's about the individual. So no, it's there's so many different rules. I've spoken to people talk to me about it, and there's so many different rules. Oh, but if it does this, then yeah, they're always explaining away why. Oh yeah, but you wouldn't have sold this one, but on this one you would sell it, and that's fine. There's a lot of rules, but it just means that it's just a method. It's not some holy grail. The only holy grail, as we know, as traders, is us. It's our mindset. It's not the method you use. Um, People are looking for the holy grail of methods, but it's really not. So it's just a lot of marketing hype, unfortunately. It's what all the kids are going for. Marketing, hype, jargon. That's it. Okay. Proto, yeah, full-time trading, 7 years, dedicated for 16 hours a day. Wow. Reading tens of books, hundreds of essays, and thousands of hours YouTube, but at a loss. Wow, blimey. Um, yeah, that's quite interesting. So, if you've been doing something for that long, um, sometimes what can happen, what I found is the people who are searching, what the problem is, Proto, um, that's a warning flag to me. Sorry, Proto. That people, what happens is people crave um, knowledge, and they think that learning more is going to help them improve as a trader. And actually, sometimes it can act as a restraining bolt because you learn so much stuff that there's always a reason why you think the market might go up, down, whatever, because you almost overlearn, and then you have to then try and unlearn all this stuff you've learned. So sometimes people put a lot of emphasis on trying to learn more and more and more, because what they're actually at their heart trying to get is certainty. So they're craving certainty. So it usually comes out of a place of fear. So I would suggest, Proto, without even knowing you, that you're probably a fear based trader because you need certainty. And that's why you're spending 16 hours a day reading books, essays, and all of that stuff. So I think you need to completely reevaluate what you're doing. You don't need to learn anything more. So what you do need to spend time on is that a lot more. Hopefully that gives you some food for thought, some thoughts there. Um, oops. Dan, I remember being stuck in a cycle during my first 2 years of trading where I was just trading the strategy and concepts, trying to implement as much as possible, thinking analysis is the answer. Boy, were you wrong. Yeah, you can just overdo it. Yeah, like I think I was just saying about Proto there, Dan. And so, yeah, you can just overdo these things, and you get analysis paralysis, don't you? Because there's so many different things you're seeing, and you just can't filter it all out. Bitcoin's now down 6%. Um, Proto, it's a pleasure. Hopefully you take that in, as for what it is. I'm trying to give you some advice there. You seem like you're appreciative of that, but no, I'm being serious. It's yeah. Once you understand who you are as a trader, then you can then start to work with that. So um, it sounds to me like you're a fear based. There's an element of fear because of the amount of work that you're trying to do to find the answers, and you're searching for certainty, like I said. So what we need to do as traders is embrace uncertainty. There is no certainty in the markets. There isn't. Doesn't matter what your strategy, what your method is. There is no certainty. So the more that you can embrace the fact that there is no certainty, you can then let go. And the more you can let go of the fear, the better the trader you will become. So there's a lot of work that you need to do, but yes, just giving you some ideas there. Yeah, it's a good point, Sadesh. Yep. Nice weekly on Bitcoin as well. Yeah, we've only got we've got a couple of days yet to go on the weekly, haven't we? But let's have a look. Yeah, I'd love to see Bitcoin come back down to challenge this trend line here of the channel which started from what the October when it started rallying in October. So a run down to here, I think, would be great on Bitcoin. So yeah, let's go back and look at that on the daily chart. This is the channel I'm talking about here, which started from roughly down as we broke up here back in October. And it was a nice channel. Then we broke out of it. Well, maybe we come back down to test it. So that's back down at, I don't know, 60 by the time it gets there, maybe 60, upper 50s. I'd love to see it down at that zone. I don't know if it will, but I think that would be a lovely level, lovely area. Um, it just started getting a little bit. I use the word frothy. It just started getting a little bit hyped. Like I said earlier, just one of my members said that he was at his his son's five-a-side football match, and one of the parents was talking about how he's just bought some Bitcoin and it's going to go to the moon. And when you hear the average Joe talking like that, then it's a warning sign. And obviously, that's just one example, but I mean, I am starting to hear other examples like that. So maybe in the short term, the sentiment's got a little bit frothy and it needs, and it's due a pullback. We'll see. Fear and greed index is at 88, right? Yeah. Okay. Okay. Well, I think we're nearing the end of this chat this evening. I can carry on chatting, but I can see the comments have started to slow down a little bit. Blimey, there's loads of us here. Um, I can carry on for another 10, 15 minutes. I always had it in my mind that we'd finish in line with really the US equity markets finishing, but if the comments slow down, then I'll slow down. We've done a little bit of analysis here tonight on a few of the key markets. I can carry on talking. And if anyone's got any questions, by all means, we'll carry on. But it was just nice to have a bit of a catch up, really, with you all tonight. But I'm quite happy to sit here for a little bit longer before I have to go. But if there are no more questions coming through, then of course we will bring it gradually to a close. But I know it takes a while for the questions to come through, so I'm giving it some time here. Michael Saylor's offloading his own stock in MicroStrategy quite heavily. That's not a great sign, is it? Yeah. But the only other thing with that, Timmy, is that having said that, that's not uncommon that business owners sell their own stock when stocks are moving higher. So that is quite common anyway. But nevertheless, I don't know to what degree, obviously. So, um, but yeah, might be a good time. Yeah, maybe. I wake up at 6 a.m. My alarm every day, 6 a.m. But you got to bear in mind, I'm not day trading, but I get up at 6 a.m. I like a long breakfast. I sort the dog out in the morning, get him sorted out. I enjoy a coffee. I enjoy um, checking the markets out, seeing what they've done and where they're at that moment in time, early doors, and then getting prepared for the day because I'm with my members from 8 o'clock in the morning. So I have that window between getting up at 6. I get straight into the shower and get ready first before I come downstairs, and then we have the you know breakfast and all of that, and then I'm building myself, getting ready for that first session of the day at 8 o'clock. So that's what I do. When will I do another stream? I don't know, Thando. Where are we? Middle of March. I should do them more often. I say that every time, then I forget because I just get so. I'm just so busy in doing what I do. So thank God we have. I have Sam, my PA, and her son does a lot of my social stuff. He's putting all the social videos up, the YouTube shorts and stuff. I'm not doing it. He's doing all that. I don't have the time for doing all that. So a lot of the time, I'm just engrossed in what I'm doing day to day, week to week, which is being with my members, managing money. I run four or five different funds now within all of that, and it keeps you busy. I have meetings because I'm regulated here in the UK, and there's always stuff going on. So, so yeah, I don't always have time for doing social media stuff all of the time. The traders who are on social media all of the time, you have to ask, what are they doing? If they're putting out lots of content, we are lucky now that I do a studio recording once a month, and then that gets chopped up into little segments and then put out there. So I'm not actually having to do much. And I'll do my videos, once or twice a week. I try to do them twice a week, but not this week because we're doing the broadcast. But that's it. I don't have that much capacity to be doing much more. That's interesting, Sadesh. This is really interesting here. So Sadesh is saying, um, how do you deal with sizing up? He has a 33% win rate and he doesn't feel confident in sizing up on his trades since any given trade has a low probability of being right. Hmm. And yet, Sadesh, you have a highly profitable strategy. So what's wrong? What we have to think about is not win rate, it's profitability. So overall profitability. So if you've got a profitable strategy, then it doesn't matter whether it's got a 33% win rate or a 53% win rate. Um, so you shouldn't be thinking about win rate. You should be looking at it overall and saying, this is a profitable strategy. Doesn't matter if, um, it's only winning, I say winning, it's only having on average 30 profitable trades for every 100. As long as it's profitable, So you're either confident in your strategy or you're not. So if you're not confident in strategy, then you have to go back to the drawing board. But you told me that you've got a strategy that's done well. So the only way to increase the win rate is to do what? Reduce the risk to reward. But then quite often, so your win rate will go up to 40% or 45% if you reduce the risk to reward. But quite often, you end up with a less profitable strategy. I mean, by all means, go and test it. But quite often, if you say, well, what if I bank the profits at 1 to 2 risk to reward? Yeah, naturally, your win rate will come up because the market's not having to run as far to hit your target. But quite often, you end up being right more often, but not making as much money. So your win rate's slightly higher, but your profits when you are in a profitable trade are less. So, but go and have a look at it. But that might help you with your confidence. So I'm more interested in overall profitability rather than win rate. Look at the world's most successful traders. Paul Tudor Jones, one of the most famous hedge fund traders, average win rate was in the 30%. Jim Simons, the wealthiest hedge fund billionaire, I think, in the world, and his quant strategies are only right. I say only, but about 50% of the time. Look at some of the original turtle traders. Look at top of my head now. I've forgotten his name now. He runs Chesapeake Capital, and I've forgotten his name off the top of my head. Win rate in the 30%. So you don't have to have a high win rate to be highly profitable. So are correlations um, among currency pairs reliable in the long term? They come and go, like Mike. So correlations, unfortunately. So there'll be times when they're working really well and there'll be times when they're not. So are they reliable in the long run? Probably not. There are times when they will be. The correlations work really well, and then there will be long periods when they just fall out of love with each other. So yeah, not. I don't think so. Is the answer. Do I have 6 screens, Sujay? Oh yeah, you can see the camera. I do, but I never have the top ones on anymore. In fact, I'm literally about to buy some new screens and get rid of all of these. Too many cables. I've got 6 screens, so that's 2 cables per screen. I'm just going to get rid of them. I don't need the top 3. I never use them. So I'm just going to get rid of them all and have some slightly larger. These are 27-inch screens. I'm going to go to sort of a 32 or 34 and just do that. And I never use 6 screens. This is enough. You can't quite see all of my screens here, but yeah, so no, it's different when I was day trading, but I don't day trade anymore, so I don't need lots of screens. So I still need to multitask, still need to have enough screens, but I don't need that amount. Michael, do you think S&P could hit 6,000 later this year? I think the odds are lower that it would get to 6,000, Michael, just because if I go to the S&P and we go to the beginning of this year, so if we go to January of this year, the S&P started at around about, let's call it 4,700, okay, 4,700. So for it to go from it's not that it couldn't, but I think the odds are lower, Michael, just because to go from 4,700 to 6,000 would be, I think, over. I'm trying to think in percentage terms what that actually equates to. 4,700, 6,000. So what's that? 25% plus? I don't know off the top of my head. So I think the odds are lower that it's going to go that far. But I am a bull, as you know, Michael, for this year overall. I was bullish through 2023. I am bullish through this year. Obviously, the markets could do with a correction. We are in a historically a period through March, April of a period where we have historically seen corrections during presidential election years. During this period phase, we haven't seen one yet. But nevertheless, overall, the probabilities suggest that we should still have a profitable year for the stock markets and an up year for the stock markets. But for the stock markets to go um, uh, to 6,000, or for the S&P to go to 6,000, that's quite a big percentage gain again. So I'm not sure about that. But I am looking, I'm looking for the stock market to have a reasonable year. But the S&P is already what's it at? Been at 8% plus now, isn't it? 8.5%, 9%. Oh, I see, Sadesh. So you're coming out of a drawdown. So yeah, that's affecting you a bit. Yeah, fair enough. Well, you can always have a look at it and try and get your win rate up if that's affecting you. But just have a look at your overall profitability. Once you see the numbers in front of you and you say, right, what do I want? I can be right more often, but actually be less profitable. Logically, it makes no sense. But we are human beings. We aren't logical a lot of the time, especially when it comes to trading the markets. So, you might say, well, I can trim my risk reward and I can still be profitable. Yeah, I'm less profitable. If you're more comfortable with that, then have a look at it. But I'm always more interested in, well, what's the most profitable approach here that I can trade with? So have a look at it. Yeah. Uh, uh, Today you had a losing day with gold, let yourself down with a 4% loss. How would you recover with a setback from this magnitude? I'd say the first thing, Aaron, hi, Mohammed. Um, I would say the first thing would be to take at least tomorrow off, Aaron. So if you're feeling it, which obviously you are, um, then you need to take a day or two off from the market. It's amazing just by walking away from the market for a couple of days after taking a heavy losses like you have done there today. You lost 4% on the day. You come back after a few days and you're just that little bit calmer. If you go back into the market tomorrow, you're still going to be thinking about what? Trying to make back the loss. That's not the right way to trade. So you need to and that does calm down if you take a few days off. So that would be the first suggestion that I would give you there, as far as how to recover. And then you need to forget it and just say, right, okay, now when you start next Tuesday, let's say, this is my new starting point. What happened there when I lost that 4%? That's an education for me. Forget trying to make back the 4%, because otherwise you'll make more mistakes. So if anything, downsize your positions, trade smaller, and say, right, I need to earn the right to be able to trade bigger. So you've made a mistake, downsize your position. So people are like, yeah, but then I'll make less. Yes, that's right. And that's probably a good thing, because you'll trade better trading at smaller size. Just accept that it might take you a little bit of time to make back where you were. But if you do it the right way, slower, smaller, you'll trade more logically. You've got all the time in the world. The markets aren't going anywhere. They're still going to be here in a year's time. Your little blip you've had today is insignificant in relation to what you're going to be doing over the next year, 5 years, 10 years. put it into perspective, and then and by that way, by default, you start to desensitize uh, the situation and say, oh yeah, in a year's time, if I'm looking back at what happened today, was it that big a deal? No, not really. There you go. um, Hopefully that helps, Aaron. Anyway, we are getting really to that point. Oh, the S&P bounced in the end. Look, anyway, so yeah, bounces. So if I come back, yeah, that's the hourly chart. Just bounce into the end here. Big bounces here on the CFD futures contract there. So like I said, you in the final hour of the day, you can either get sell-offs or you can get big reversals, and we've seen quite a big intraday reversal there, right in the end there. So yeah, quite interesting there. Um, Even Bitcoin's bounced a little bit, hasn't it? A little bit off its lows, right? Okay. Um, yeah, I don't. I'm very aware that it's 8 o'clock now UK time, and if I carry on, I'm gonna be sitting here at 11 p.m. So I'm going to try and work my way through this next few questions, and then we'll probably have to call it a day. Michael never thought to consider the percentages. Sorry, Michael. What was that? What was that in relation to? I've already forgotten what we were talking about. Oh, the S&P. Yes, yeah. Would you suggest ranking your setups as A, B to F, rank and sizing up accordingly? E.g., A rank a setup with 2% risk to F rank with zero point 0.2. I'm backtesting double tops and bottoms in FX. Um, yeah, you could do if you've got enough data. Then I guess you could do that. You could rank, and then the the strategies that are most successful could be allocated more capital towards them. So yeah, you could do that. Um, yeah, good stint. Yeah, um, Sadesh, you actually. Yeah, you like your style of trading. You just want to be the best that you can be. Yeah, that's okay. That's good. That's really good. And I know that higher win rates then underperform. Yes. Plus, I know my edge will last longer because few people can trade it. Right. Um, uh, but see, this is the interesting thing, Sadesh. Logically, when we're chatting here, you're agreeing with me, but you're also being illogical because you're also talking about effectively the fear there as well. And there's nothing wrong with fear, of course. It is an illogical, it's an emotion. We just need to desensitize that. So by rationalizing it and going back over, like we've just said, over all your trades, you're now selling it to me, which is great. Because you're saying, actually, Charlie, no, I like my strategy. Very few people would be able to trade it. Great. That's what I want to hear. So you're now digging in, saying, yeah, actually, I do like my strategy. And, no, I don't know if I do want to have a higher win rate because this is profitable this way. There we go. uh, I love these chats. In my trading room, we're having chats like this all of the time with traders. So, yeah. Right. Previous question about funds. Can you repost it, Sadesh? Because I can't see it. Oh, here we go. How do you go about founding a firm? I have been trading for prop firms, but the instability is making you skeptical. Yes, not surprising. Thinking of maybe going a fund route, but still need to build more confidence. Well, if you want to have a fund, then you need to get regulated. So that's the first thing. So you need to have a look at how to go about get regulated. So I don't know what your experience is, industry experience, all of that sort of stuff. So, but yes, there's a lot more to fund trading than just whether you can trade on your personal account. Of course, you need to, um, yeah, you need to look at the regulatory side of things, which is obviously very, very important. If you want to have the responsibility of managing other people's money in a fund, then yes, it all has to be regulated. Uh, Jost, what would you recommend for me to do when starting an account? I made really good returns, also long term. And then after this big winning streak, I messed it all up and overtraded. It just comes that day when I'm lacking discipline. Um, Jost, what would I recommend you to do? It sounds, I don't know. Yeah, basically, it sounds like you're getting overconfident there, Joss. So you've had a good winning streak, and then you've messed it all up because you've become overconfident. So that sounds to me like that may well have been the problem there. And then you've started overtrading because you just thought, oh well, I can touch anything almost, and you start just trading that little bit more because of overconfidence. So you need to use a lot more self language to try and stop you from overtrading. So, for example, you could say, I can't afford to take this trade right now because it's outside of my trading plan. And although it might work out, that trade doesn't belong to me. It may belong to someone else. You need to start using more self language like that. Or if I take this trade right now and it fails, will I kick myself? That's another line that you can use. And then, oh yeah, it works as an arresting mechanism. Oh yeah, I can't take this trade because yeah, I'd be upset if it fails, because you should never be upset with a losing trade. Losing trades aren't bad trades. They're good. They should be good trades that just didn't work. So if you have losing trades and you're getting upset about them, either you haven't mastered your mindset yet anyway, or you're over trading and you know, so because you could have not mastered your mindset and you're actually taking good trades, but you still get upset when they lose. That's a mindset issue. Um, if you're over trading through overconfidence, and then you berate yourself, oh, why did I do that? You need to start using arresting mechanisms, arresting language to stop yourself from taking those trades. If I take this next trade right now and it fails, will I kick myself? Oh yeah, I would do actually. Right, don't take it. You know, it's that sort of stuff. Okay. Right. I think we are about there. Um, yeah. I think I'm going to have to call it a night. We've been running for um, nearly 2 hours now. So thanks for all your questions here. I know that we did some analysis earlier in this evening. We had a look at several markets. So, but I can't keep going back over them. But yeah, I was going to tell you some stories, but there's just so many questions that I'd rather obviously answer your questions as much as I can here. I know it's all very much high level because I don't know the ins and outs of some of the questions, but I can at least give some general advice most of the time. I can, you know, I've been doing this for 27 years now, and I've met a lot of traders from all walks of life. I've pretty much seen it and done it. Either seen it and done it myself, or I've seen it in other traders and seen what they've done. So I think I'm in a good position to generally give some reasonable advice to people. So hopefully that's been a bit of an interesting chat for you this evening. Beats watching EastEnders, doesn't it? Take care for now. I'll see you on YouTube.